Despite sub-Saharan Africa having around 15% of the world's Muslim population, Islamic banking assets in Africa comprise only 2% of global and less than 10% of total domestic banking assets in most African countries as of December 2021. We had an in-depth conversation with Abdelilah Belatik, the Secretary General of the General Council of Islamic Banks and Financial Institutions.
During the pandemic and because of the lockdown all over the place, all over the world, and many sectors of the economy, the tourism industry, the services, and so on, they have been heavily impacted, and in particular, many of the SME sector that they were impacted. So during that period, we saw a very positive transition and on the digitalization space for the banks, for the Islamic banks. So many of the Islamic banks that were planning for digital transformations, perhaps in the next 3, 4, 5 years, they brought forward most of the product that they had to cater for the needs of their customers. So this and with many of the government initiatives to support the economy and in particular the small and medium enterprises, this was very beneficial. And going out from the pandemic during last year, like mid of last year, so we saw a great rebound on openings of the economy. And based on this, there is like a few factors that were perhaps impacting the financial sector and will continue to impact for the next few years. Is the digital transformation is one area where has been very significant improvements leading to economies of scale and reaching to customers much more easily. And the second area is the shift that we have seen on ethical financing and looking perhaps on a different side to sustainability practices, which is aligned with the objectives of the Islamic finance values and Sharia itself. So this made it easy perhaps for the Islamic banks to navigate into these new trends and new areas, which will be potentially much beneficial for the future for Islamic finance. And then because of this, we have seen for last year strong growth in most markets. That's where the Islamic banks are in GCC, in Africa, in Southeast Asia. So it's a consistent growth markets, and we still continue to see this trend ongoing. Some of our research that we do, we see that in most regions, Islamic banks, at least they have at the same level or outperform their counterparts in many of these regions. And coming to the African region, I think there is perhaps, and we see it a lot of time, this is probably the region that has the most powerful growth potential for now and for the coming years. Because while we see, for example, in some existing and matured markets in GCC or Southeast Asia, still growth continues, but with perhaps slower growth potential. What we see in African markets, even though the size is still small compared to the other regions or compared to the financial sector in Africa, we see the growth very, very high growth potential. I mean, it's more than double digits. It's year on year what we have seen for the last maybe 5 years. For example, from 2017 to now, we have over 250% growth. So we passed from 30 billion something to over 85 billion currently by the end of 2022. So, and this still continuing. So year on year, we see in average around 25% growth in African markets, despite many of the challenges that happen and many of the difficulties and perhaps the incomplete ecosystem that is there. So we see this. So we think that this is really a tremendous opportunity, and it is going, and we have even more as we see increased interest from many regions within the continent.
The 25% growth that you've touched on, is it for the last 1 year when you're looking at the growth here on the African continent? And what are the profitability rates comparing to other regions that Islamic banking is operating in?
Yeah, for 2022, it's about 25% growth in the continent. So we exceed for now 80 something billion US dollar in assets in the African continent. And this, despite, as we say, still, if we compare to global, for example, global financial sector, in most, I mean, we are, for example, at about, for example, Islamic banking globally represents 80% of the Islamic finance sector, where we have Sukuk perhaps have about 15 to 18%, and remaining within funds and the takaful, the Islamic insurance. What we see in Africa, because the ecosystem is still not complete, so the majority now is on the banking side, where the Sukuk represents really a tiny portion. Even though it is growing, it represents still a tiny portion. So which means that as we see now interest from many of the countries related to Sukuk issuances from Nigeria, Morocco, Kenya, Egypt, and Senegal, and many others. So we think that this will have, again, a very big push to the industry globally. And talking about profitability, from the surveys that we have with the members, in general, it's very healthy profits that are seen by the Islamic banks globally and in African region. As we say, African region has seen like perhaps the growth is much higher that we see in different parts. And even though the ecosystem, like the balance between, for example, the banking, the capital market is still unbalanced, and in many countries there is a lack of, for example, either adequate regulatory framework for the Sukuk capital markets, the takaful industry. We still see this growth very high, in particular in some countries, but with others starting now to build this ecosystem. So that's why we are very positive, and we think this will continue over the next few years with over 20-25% growth in many of the countries of the continents.
Yeah, definitely. There's a lot of untapped potential here on the African continent. Even looking at data, sub-Saharan Africa has about 15% of the world's Muslim population, but yet Islamic banking assets comprise of only about 2%. So when you're looking within the African continent, what are the limitations that are within the borders of the continent?
Yeah, I think we can look at it in two ways. Okay, we can say it's still small compared to the others, but from our perspective, what we see is what is the impact that Islamic banks are doing. And we know that Islamic banks in most regions, their focus is primarily on SME sector and improve the financial inclusion. So in this aspect, they have a very important role to play. So the potential, again, when we see, for example, some of the key markets where Islamic finance in Africa exists, even though, for example, we look at even like Nigeria, South Africa, Kenya, Morocco, Egypt, and so on, we see that still we don't have a complete ecosystem on regulation that is in existence. In many countries, for example, they started with the banking sector, but the capital markets still lagging behind because there is no adequate regulation on it. So no issuances of Islamic bonds or sukuk. The takaful sector, the insurance, which is also a must to have an orderly development of the industry, you need to have these three components to be going together, at least these three components to go together. So this is missing in many of the African markets. Now, we're not looking at the glass half empty. So we know that in many of the countries, the industry started perhaps a bit late. So we have seen really some big improvement for the last 5 years, 7 years. In many parts, even like North Africa region, Morocco, in others, they really started to be more serious about it in Nigeria, South Africa, the last 5 years. So with this, and we see, as I said, from, for example, 2017 to now, the Islamic finance sector moved from 30 billion to 85 almost billion by the end of 2022. So you see the growth is really huge, despite other things that are missing. So the opportunity is there, but we see also, again, I think, and this is perhaps one of the particularities of the African markets, is we think that digitalization will play a pivotal role for this growth in the future. Because one of the challenges that Islamic banks face in the continent is the scale. Many, they are not, perhaps they don't have the big sizes that have in other regions, in Malaysia, for instance, or in GCC region. So there is a difficulty in reaching out to customers in the whole country, for instance. If we look at Nigeria or South Africa and so on, there is a difficulty in reaching out or covering the country like conventional banks did, because they're existing there for years and years. But we think that digitalization will improve this process and will facilitate the reach to the customers in the wider region. And this, we have seen it, I think, as we have seen in Africa in particular, on, for example, mobile payments and so on. So I think it's the African customer is tech hungry, if we can say. So we'll be able to use this, and I think this is a potential. The banks have to leverage more on these to ensure they cover the gaps that are missing in their inherent markets.
Yeah, I mean, also sustainability is an area that will have significant implications on the financial space, looking at climate change risks, rising interest in ethical financing. How is Islamic banking positioning itself to tap into this and also creating products around this?
Yeah, I think sustainability, I mean, in CIBAFI is something which is really close to our hearts, and we have been working on this for many years now. I mean, for maybe 5, 7 years or 8 years that we have been working on this, because we see really close synergies between the Sharia financing, Sharia compliant financing, and with its ethical characteristics and sustainability. From the research that we have done, there is a strong correlation between the two, in particular also between sustainable development goals and the objectives of Sharia or Islamic finance. So since we have this, and with the pandemic that hits the world, so there is a kind of paradigm shift to look at the economy differently globally. So we have seen this higher increased interest in sustainability, environment, social, and governance, becoming at the center of many of the companies. So we see this as a big opportunity for Islamic banks and for the financial sector to embed these principles a little bit more. So Islamic finance has this in its DNA. Now we have some, challenges and certain areas that we need to improve. In particular, we think in disclosure and how to make this a systematic way, and to be able to benchmark to the industry, to the sector, to the other financial institutions of the financial sector. So we think there is still some room to improve in this area, even though, I mean, in particular in terms of benchmarking and disclosure purposes.